Hello everybody, I hope that you are doing very well and welcome to this evening's Contenders live stream, which I feel is going to be a very nice one today, wrapping up some of the topics that we've covered in the prior three sessions. I've got a bit of a nice insight into risk management and why risk management is important, and I'll also want to start with Walton Chain Chart of the Week. So it's a little bit of a nice one I feel today, starting with Chart of the Week, then I'll go on to some questions and answers that you may have during the course of today, but I want to basically use primarily Fibonacci today, do some charting, go through some, essentially looking for some setups using Fibonacci, just so it can like totally integrate how we're using this. So let me firstly check that you can all hear me, because for the last like 3 live streams in a row, I have forgot to go live. So this is me like starting speaking when the mic's not hit go live. So if someone wants to confirm that they can hear me, that would be absolutely brilliant before we begin today. 264 profit 1 hour following Dan's BTC trade. Yes, mate. To be honest, it was quite easy trade. Hello, evening. Hello, everybody. Yes, evening. So, if you're wondering what who's that? John is on about. So yeah, this is obviously still my challenge account, by the way. But yeah, obviously got filled. What is it? Literally on that rise was. So you're talking about literally about 1 hour ago. So 1 hour ago, took the short on that rise. This was from a bid that I had preset all day, just so you're aware, because I'm sure people are going to ask during the course of the live stream. So I am in that short position. Did catch that one. What's that, about $250? Yeah, more or less the same, I think that is. Yeah, so I'm in a short right now on Bitcoin. Stops, I've just, for the sake of this video, I've put my stops into slight profits, but we can go over Bitcoin as and when it comes. Yeah, so yeah, I think this is pretty nice. I'm pretty content trading this challenge account, because obviously I've been doing it more lately, and I'll show you, like, this is the importance. You have to remember, like, this is like a relatively small account, okay? But the thing is, with a, obviously I say relative because to some people it's very big and to others it's very small. So relative terms, it's currently sat about 2.8 Bitcoin. But the important thing is not looking really at the size of the account, but the consistent gains that you're seeing on the account, okay? Because that's what we want, okay? And over the course of today, I hope that you'll get some great insights into how I trade. So I believe tonight's going to be a really, really good one. But what you're after essentially is, you're all here because you want to make money, and you want to make money not just from a one-off trade such as this. It's the consistency. You want to be doing this every single day. That's the important thing. So well, I'm not even sure this account. So the last week. So let's go over the last week of trades here. This is, like, you can see the last week. So basically 8th of November. So basically 1.5 weeks ago. So 1.5 weeks ago, this account was sat at about 5.9 BTC. It's now sat at nearly 2.9. So what can we say about a 0.3 rise in what's that, about 1.5 weeks? So 0.3 BTC is about $2,500. So for I want to say relatively small account, $2,500 in 1.5 weeks trading is a substantial account. Is a substantial gain in terms of percentages, and that's what we're after. We're after the consistency. So for this to continue, week on, week out, if you're consistently making every week 0.3 Bitcoin, 2.5 grand, you have to remember the account size is this. What is this account sat at? About 20,000 more or less, the account size. So if you can consistently make these games week after week after week after week after week, this is how you can move into full-time trading. If you want to be a full-time trader, you just need to aim for the consistency. That's number one. First, you need to lock down your trading system, and that's what I'm here for. Secondly, once you've got your trading system locked down, you need to get comfortable actually putting money on the line, because as I mentioned in prior videos, there's a difference between charting and trading. Okay, you can be a very good charter, but it doesn't mean you're a very good trader, because when you actually have money on the line, it's a totally different ball game. Okay, psychologically, it's really different than saying, oh yeah, I'd long there, and then actually longing there with money on the line. It's totally different, charting and trading. It honestly is. So you need to, really need to get past the psychological, emotional barrier of having money on the line. And then once you've got the system, once you've got the consistency, and once you've got the psychological aspect, fit, well, that's where you can naturally progress into doing what you want to do, you know, full-time trading. So yeah, I'm absolutely here for you to help you with that. And I think it's important to, you know, this is obviously the, you know, for me like a challenge account, but nevertheless it's important to show you like how it's going. You can see the gains are pretty consistent for this account. I think it's, you know, a good you know, a good example of, you know, to show you that it's totally possible. So yeah, I'm pretty content with that, I guess. And you know, that sort of gain, you know, on this account, you have to imagine that for a standard type of wage, this is, you know, this is more than what people would earn in a month, earning in about 1.5 weeks. So it's, you know, it's relatively good, I think. So yeah, sat in that position at the moment. Explained that, moved stops into profits just in case we get some random scam, you know, just in case we get a random pump going on during the live stream. I don't want to be managing it too much. I want to like concentrate on what I want to cover. So just so you're aware of that position and how this account is growing. And obviously this is primarily traded on the Champions live streams, okay? And I do also now trade it with private clients doing scalping together, basically. So yeah, there's that. So I wanted to start off showing you that position that I'm in, just so I can clear up all those questions that are inevitably going to come. And now starting for today's live stream. So I hope that you all enjoy. So starting with Walton Chain chart of the week, which has been a bit of a as you're about to see in a second. But essentially, it was a long trade. What I'm looking for here is, I think I made my thoughts very clear over, well, I guess if you're in the Champions Group, of my opinion on altcoins, basically. You know, long trade from continuation of bullish market structure. What Walton Chain does, what Walton Chain dropped down into monthly support, okay? So we saw a drop down into monthly support, and we saw a bounce, okay? So I did not have bids preset at the monthly. I actually just refuse to preset bids on altcoins at the moment. I much prefer to do as I'm about to show you on Walton Chain. So I think this is a brilliant example of how I look to trade altcoins right now. Okay, I'm not catching knives. Okay, so it was a continuation of bullish market structure off monthly support. Okay, so very much only a short-term trade. Stop loss will be set 2 higher lows back, as I like to do. 2 higher lows back to stop loss. No take profit 1 level, and you might think, oh, this is a bit different, but no take profit 1. But for me, though, this is a trade that would either go to target or stop me out. There's no middle ground with Walton Chain. It moves. You know, this is also the luxury of trading altcoins or just specifically stocks in general, trading something that you know the behavior of. I know, because I've traded it long enough, how Walton Coin trades. If you go into Walton Chain and you've never ever traded it in your life and you go into it, you have no idea of the characteristics of the coin, okay? And that's why you know, when people ask me, oh, Daniel, what's your opinion on ZRX, you know, no, what's your opinion on SLA coin here, you know, some coin that I've never heard of in my life, it's very hard for me to give an opinion on these sort of stocks and coins because I've never traded it in my life. I have no idea of the characteristics of it, okay? That's not to say I couldn't trade it, but why would I trade something, you know, let's just say this, you know, I like to trade my watch list because I trade it every single day. You know, for example, stocks, I've been trading them for coming on 10 years, okay, just obviously a little bit under that, but coming on 10 years, I've been actively trading a lot of the same stocks. So I have ingrained in my brain how they trade, okay? So for example, Walton Chain, obviously I've not been trading crypto 10 years, so not so long, but nevertheless about one year more or less. Walton Chain, I'd be, you know, 1.5 years on Walton Chain. I didn't trade it originally, but for me it's like a newer pick over the last year, but nevertheless I have experience of it trading this coin in particular over the last year. I feel as if I have a very good feel for it, okay? And there's such an advantage in trading something that you have a feel for, and you know where the moves go, okay? So I know Walton Chain is very much all or nothing, you know, that once it gets moving, it should move, and it doesn't like to do these half rises and drops. Thus, in this particular example, bit of a scalp, there was no take profit for me. It was to target or to stop loss, essentially. And that's you know, just one thing that, you know, just putting out there, like when you do ask me for an opinion on a stock or a coin that I've literally never touched in my life, you have to acknowledge that I have no experience trading that stock, so I don't you know, I just don't know, period, the characteristics of the coin. And I feel every coin has its own characteristics, you know. For example, for example, Link. I have traded Link extremely well recently, and I absolutely have ingrained how that coin trades. But you asked me on a random coin that I've never traded. Obviously, I don't know the characteristics of the coin, don't know how it trades. That's not to say I couldn't trade it, but I don't have the knowledge or statistics of how it trades. So I think that's important to know. Just to note here, Walton Chain, why there was no take profit one, because I just know how it trades basically. So Walton Chain, this was the setup for me. So it was, I've kind of tried to put a picture of what I was looking for here. But basically, as you see, there was when I posted this, what was it, yesterday, it had just dropped down onto monthly, and how much I love my horizontals. I absolutely love my horizontals, and this is a perfect example. I think that you see here it drops down onto the monthly. You're talking pretty much to the sat. So you drop down onto monthly. I did not have any bids preset there, but I did have an alert set there, so I was alerted when Walton Chain was going off. So I knew Walton Chain had bounced from monthly. Okay, but what you can see here is that's clearly going to be your first resistance, old support. You're at it right now. So I don't want to be buying while price is sat at resistance, because for me that's a resistance level. So I refuse to buy there. What I've actually got, dictated in my mind is to trade this once it takes out these highs. Okay, because you see here, once you've taken those highs, well, I would expect at least to trade into these lows. Okay, at the very least. But ultimately my target was essentially the confluence of the 618 and the highs of the wicks. So essentially anybody, you have to remember that people don't really short their stop, but nevertheless there would be a lot of stop losses sat there, or people waiting to buy the breakout of there. Essentially I'm looking to take profits where everybody else is going short, much like the Bitcoin short that I'm in. Okay, it's exactly the same thought process. Where everybody else is looking to buy the breakout, or has their, maybe they're short here and their stop loss is there. I'm looking to basically sell into all those sell orders. Okay, or all those buy orders. Essentially exactly the same as Bitcoin short. So I was looking, as you see here, the entry was 163. What we had here at 163 was a high, a high, a high, a high, a high. Everybody that's short here has their stops above these highs, and also people sat on the sidelines are waiting. Okay, once these highs are taken, I'm going to enter along, because from textbooks are going to tell you once you take a high, that's bullish and you want to go long. So I use that to my advantage, see that people are going to be looking to buy the breakout, or have their stop losses there. That's a lot of buy orders. Okay, so naturally when there's a lot of buy orders, you can use that to fill big short orders. Obviously on this account this is far from a big short order, don't get me wrong, but nevertheless that's where bigger traders are looking to fill shorts. And this is but that's the theory of the trade basically. So it's very similar to why I'm taking profits there. Okay, so I hope that makes sense. And again, just another liquidity run. So basically, yeah, I was waiting for this to go into bullish market structure. This right here is not a 15-minute higher low. This is just a high. Okay, so what I wanted to see was the higher low, higher high, higher low, higher high. So a series of higher highs and higher lows. But really, my entry here is a trigger of after breaking the high. Okay, so I wanted to see the high broken, back tested, and that would be my entry. Simply entry then with stops back, not one higher low but two higher lows back. Okay, so that's what I was looking for, around 12 in the day. Okay, so I guess fortunately or unfortunately, this got into, that would have been an entry for me. So I 100% would have entered here, but that was literally like 2:30 in the morning. Okay, so if I load up the chart, once it actually formed that higher high and higher low, you can see it's actually about 12 o'clock at night. Okay, apologies, about 12 o'clock at night, and I actually was asleep. I was asleep during this, so I did not get an entry on the coin. In hindsight, it's pretty nice because it's obviously moved down, and this is what it was like this morning when I woke up at around 8:30. Clearly there was, I didn't get an entry. Okay, and this is one of the ones, I'm waiting for this, but if it, e.g. you cannot have a bid preset. Okay, I can't have a bid preset there because I wanted to see it, broken and back tested. If that happens while asleep, what I was wanting to see was it obviously hold and waking up while, in the process of back testing, or nevertheless higher. I'd be comfortable buying this a little bit higher. But nevertheless, you obviously just cannot preset a bid when you're waiting for the market structure to change. It's just impossible, isn't it? So basically, yeah, I woke up to this. You know, if I was awake at this point at, you know, midnight, I would have traded that. So I would have traded that long. And I'll go over how I could have traded that if I had done it. But obviously for me, waking up, seeing price like this, my entry was never triggered, didn't lose anything, didn't make anything. But I hope nevertheless it did explain my thought process behind what I was looking for here. And let me just show you that if I actually had entered on this back test, okay, so on this back test, that for me, like, absolutely is like an entry. Okay, that would have been an entry if I was awake. Okay, so you've broken it, you've back tested it, and you've got, you know, you've seen that rise. So buying that back test, you do make about, you could have sculpted 2.5% rise. So from that 2.5% rise, if you wanted to, what can you do? Move stops to break even. I wouldn't do that. Wouldn't move my stops to break even. And if I'm day trading this, I also trade this with no stop. But I would have, even if I bought it, would have got out break even, because what you see here was the back test, you know, the entry rise. Essentially, you lose it. But then you also, from the underside, you start back testing. E.g., I could have definitely have got out at break even on this trade once I had seen that. If I had have entered there, I myself wouldn't have been taking profits here. I would have seen this go underwater. Obviously, it wouldn't have hit my stop loss, but I would have closed it out at break even. At seeing this sort of, you know, the wicks of rejection, I would have just absolutely closed it out break even. So, you know, I hope that explains what I was looking for there exactly, okay? And you can see, you know, from what I was envisaging, to happen, those higher high, higher lows back test, we can say that basically did happen. Higher high, higher low, higher high, back test, moving up. That's what I was envisaging, but instead of getting the follow through, okay, so instead of getting that follow through, it got the back test rise, but then dropped back down for a lower high. Back tests, you know, the floor of support with a wick, drops down. You basically form. Ooh, oh my god! Sorry, I'm not sure what just. Oof. There. Felt like there was a spider in my ear or something. Yeah, we got that. Sorry, that was a bit weird. Yeah, there was obviously like a double bottom off of that monthly. Oh my god, that was I hate spiders, by the way, and it just felt like something in my ear. Yeah, there was a double bottom of that monthly level. Oh, that was really distracting. Sorry about that. Yeah, there was a double bottom, obviously, of that monthly. We got another rise, which, you know, about 2.5%, but I don't myself, I would not contemplate taking that double bottom myself. I just wouldn't trade it. But, you know, somebody must have. You got another rise, you got another lower heights. It's not looking great. Obviously, you need to just change this overall, don't you? So lower high, lower high, lower high onto the floor as support. It looks like it could break down, to be honest with you. So yeah, there's not another entry here. I hope that has explained why I done this. I felt this was a good one for chart of the week, to be honest, because I felt this was like a good idea of telling you what I look for entry. So this is like what I would class as an entry trigger. So the entry trigger, let's just confirm why I think this is good educationally. So entry trigger, what's the entry trigger? Very simply, the entry trigger is higher lows. Okay, so higher highs and higher lows. After clearing a resistance, break the high, back test it, which is entry for me, stop 2 higher lows back, trade it to target. Okay, if I'd been awake, I 100% would have traded the back test. I could have got out break even on this trade, to be honest with you. Obviously, it wouldn't have been a profitable trade, and that's something to remember, that I am not winning every trade I take. Okay, so even on this challenge account, you have to see that, you know, there are days where I have a loss. Okay, obviously that you have to remember the losses are much smaller than the wins, but nevertheless I take losses, and I want to really emphasize I take losses, because losses are part of trading, and you have to take losses to get wins. Okay, so yeah, I just, you know, although I didn't lose this trade because I never got the entry, I would have entered this if I was awake, and I would have taken a loss on this trade. Okay, I just really want to emphasize that, and that's just part of the game. Okay. Question of how do I decide which coins I'm interested in trading? Essentially, the coins that I'm interested in trading are coins that I have firstly traded for quite a long time. Like, all of these coins are not new to me. I know, you know, I've followed the coins for all of them at least a year. Obviously, some of them longer, but all of them at the very least I've followed these for a year. and I have a feel for how they move. I'd say the newest coin on my list that I haven't traded as much is Nano, but nevertheless, Nano is actually technically well traded. So for me to trade a coin, I have to say it trades technically well. Okay, so for example, I have totally removed XRP from my watch list. Okay, some of you may know this. I've removed XRP. You may ask, Daniel, why have you moved XRP? I can say to myself, I have traded XRP. Generally, as well, I get the direction of where XRP is going correct. But what happens is before I get the move on XRP, there'll be not one fake out, not two fake outs, but like 3 fake outs before the move. And I recognize that there is a lot of fake outs on XRP, and I just don't trade it. Okay, so it's a process of elimination. You know, you can essentially get a coin, any coin that you want, you know, trade it for a little while. Does it trade technically well? Okay, so for example, off the top of my head, one coin that I absolutely love trading, ZRX. Okay, I can say absolutely, you know, look at that, off a weekly 10% rise. I know coins that trade technically well, and I'll trade them every day of the week, every single day of the week. I'll trade them. You know, give me a coin like XRP, which I know trades technically well, but I just know there's too many fake outs before the move comes, and I'm just not up for that anymore, to be honest with you. I'd much prefer to just trade something that I know trades well the first time, not 3 fake outs and then getting the direction correct. So, you know, I removed XRP just for an example, for that exact reason. So to get onto my watch list, the criteria is I have to have traded it. I have to have traded it for a sustained amount of time, and I know that it trades well. Atom is another new one for me, but it trades well, to be honest. But you know, I have to know it trades well, and I have to know it trades technically, because there are some coins which will not follow technical analysis. Okay, they will just move randomly, and that's generally because they're low sat coins, or you know, just generally low volume, and I find they don't follow technical analysis. So yeah, for me to be on my watch list, I have to have traded it, have to know it trades well, have to know I can, you know, just make money relatively easy on it. So yeah, that's my criteria. Where is that monthly coming from on Walton Chain? So this monthly is coming from the monthly. That's not month. That's not the monthly on Walton Chain is coming from. Let's load up this chart. It's coming from the monthly, which is it's a bit of a cheat one, I guess, but for the last month's low. Okay, so I've got that one from last month's low on Walton Chain. So you can see that was last month's low. You know, we're still in the month right now, aren't we? But nevertheless, that was last month's low. Okay, and that's the level where you can see the respect of it. Okay, you can see the respect of it. So from last month's low, there's been a lot of, you know, movement around this level. So if you didn't have it marked as a monthly, you'd have it at least marked as what I class as like a key level. So you can see the amount of support, and more recently support. You can clearly see it's a key level. But for me, it's like I've marked it as a monthly, also just a very key level of support. You know, it's really, really obvious there. So yeah, that's where I got that level from, Sandra. Cool. Let me just take a drink and then we'll move on. Hey Daniel, let me take this one question and then I'll move on. Hey Daniel, on that backtest Walton Chain, what would make you decide to enter there? Are you looking for wicks that get bought up quickly? Okay, so I presume that you are referring to the backtest here. So you're referring to this backtest of old sort of support, resistance. Well, this clearly here. So this backtest here. Well, for me, I'm just comfortable entering on a backtest, okay, because I guess I actually had it marked at 2-2, which was 2-1 there. So for me, I had 2-1. If you, I'm pretty sure. Yeah, 2-1. I could remember that. So yeah, 2-1 for me was it. So you see here where it is support, then, you know, a bit of resistance. So what you can see is that essentially firstly I'd want to see it hold a higher low, really, and here it forms an exact low, but that's still that's still fine. So really what you want to see is it form higher lows while back testing. Obviously you don't want to see a level go like that, but I don't see how that would be possible. But basically what I'm looking for, okay, is just very, very simply a back test, and I would buy aggressively on the back test. So as soon as it hit that level, I'd buy and have a stop loss set, because I do trade aggressively the back tests. But basically, to help you, what you'd always be looking for is that back test needs to make a higher low. So for example, if it had come down to here, it wouldn't have been as bullish for me. It wouldn't have been as bullish, because if you do that, then you've just broken through the last level of support. And unless it's like a swing failure and you're straight back up through the level, which is obviously and then another different story. But nevertheless, generally speaking, you don't want to see it drop down and make a lower low off of the bounce. So you want to see it hold there, okay? And that would be aggressive entry straight away. And obviously, you more conservative is seeing it hold for like 10 minutes. So yeah, that's what you're basically looking for. It doesn't necessarily have to be bought up quickly, but it depends how aggressive you are, really. If you are very conservative, you could wait until you see a large amount of volume come in and then enter on the large amount of volume coming in. Or conservative, wait for the highs to be taken. That's really the only conservative ways. Aggressive is just trading the backtest very, very simply. Cool. I hope that's explained. If not, write me another comment. But I'll move on to what I want to cover today now. And I do want to start with risk management. Okay, and that's because tonight, where I go through Fibonacci, I just feel this is really important, and I have a really great story. Yeah, I feel that it's a really good one to get you thinking. So this should hopefully be thought-provoking for you, basically. And I think by doing something thought-provoking should be beneficial to you. Okay, so let me just bear with me. I hope this doesn't bore you, but I think for me, it was a big game changer in the way I trade. So because it was so important to the way I trade, I naturally want to pass it on to you, and I really hope this helps you in the way you trade. Okay, so right, so there was a top technical analysis, and we're talking about the top technical analyst in the company of Goldman Sachs. Okay, and the CEO of Goldman Sachs hired the best trader, took him out of the firm essentially, and hired him as his personal investment advisor for the company. So he hired the best technical analysis they have and got him to basically chart exclusively for himself. Okay, so took the top technical analysis. Okay, and this is a lesson on risk management. The very best technical analysis that they had. Okay, so he is the best of the best. Okay, lots of experience. He analyzed, the very best analysis they had, identified an amazing opportunity for a long on the gold futures market. Okay, the asset was in a strong uptrend. The market was in an uptrend. Okay, and there was in a strong uptrend, and it had pulled back to a massively strong support level, and we're talking very strong confluences. So there are lots of technical levels lining up together. Okay, so you're seeing levels lining up together. You're seeing the trends in the trends of your friend. You're seeing the levels come together on the pullback, and you're seeing the sentiment and statistics to back it up. So everything you could possibly wish for coming together on this level, and this is from the top tech TA advising personally to the CEO himself, saying this is an absolute must buy. Okay, so several confluences making for an extremely good long entry. Okay, so the analyst approached the CEO with all of his data and research and said, this is the best long opportunity that I have ever seen in 30 years of trading. This is a must-take trade. Place the long now, and we will be sat in great profits in 1 week, because there was absolute full confidence in this trade. The confluences together on this long just made for a must-buy pullback. Okay, so he gave the data, gave the research, gave the technical analysis to the CEO. Okay, so prices sat right at that support. Okay, so right at that extremely strong support that the TA had full confidence in. Okay, he gave that to his CEO, and the CEO phones up his broker to place the long order straight away, because why would you want to miss this opportunity that the top TA guy has given to you on a plate? So the CEO phones the broker to make the long order. Okay, so all sounds good now, doesn't it? Okay, so extremely strong support. Everything is coming together. The confluences are just out of the world. You believe you're going to absolutely make a massive amount of money on this trade. Okay, so the CEO phones the broker, phones the CEO, and instead of opening a long, the CEO goes into a 10 million short. Okay, and price crashes straight through the support level. Okay, the technical analysis blows his mind and says, why have you done that? That was the strongest support in the world. We've just missed the opportunity. Why have you shorted this? Okay, So, you know, why have you, we could have made a lot of money off this long. It was amazing. The opportunity was great, and we had the best setup in over 30 years of trading. This was the best setup I have ever seen. Okay, and the CEO replies, in trading, all it takes is for one person to think differently than you, and that setup that you thought was unstoppable is broken. Okay, so I just hope that this story has really emphasized tonight that you can have everything lining up together. You could think that you have 100% confidence in this being the best trade of your life, but all it takes is one person to think differently than you. Obviously they'd have bigger pockets, but all it takes essentially is one person to fat finger to sell, and your best ever long entry has just gone into your worst trade of your life, and you've lost you've lost everything if you don't have risk management in place. Okay, so you could have gone, because you had so much confidence, you might go all into that long thinking, you know, I've absolutely made it here. All it takes is for one person to think differently than you. You know, maybe by accident, the biggest whale has also seen this long, but instead of clicking buy, they've accidentally clicked sell, market, and crashed through the level. They themselves are gutted. You're gutted because you've thought, oh my God, what's going on here? This, you know, just gone all in on this trade, and suddenly you've got liquidated, you've lost your whole account over one trade. Okay, and that's the importance of risk management. Okay, so I hope that's been a good story, because for me, it really changed the way I trade. It really honestly did change the way I trade when I fully understood that all it takes is for one person to wreck a setup, essentially. I fully comprehended risk management is so important. Again, and I don't think I've mentioned it enough, because it's so important. Risk management really is up there with what you need to be doing, because, you know, at the end of the day, we can have all these confluences, and as a trader, you have to acknowledge that there is no guarantees. There is no guarantees. We never know. Okay, so as I move on to my next slide here, and I promise you we're getting to fibs very shortly, but the moral of the story is that in trading, we can think we know where the market is going, but at the end of the day, there are zero guarantees. So there are zero guarantees, and I'm not saying this to put you off trading. You know, I just you have to know there are zero guarantees. And I personally believe, as a moral, that if someone is promising you that they know where price is going, you know, I refer to people on, I don't want to mention names specifically, but I refer to people on Twitter, YouTube, etc., that they have full confidence, overconfidence in what they know is going to happen. Okay, speaking in absolutes, saying, oh, anybody short is stupid, or just things like this that annoy me, if I'm honest. Or they have a, you know, some magic indicator. Okay, so if they're promoting that they know where price is going, or they have some magical indicator that they just keep making money with, I personally think that they are just trying to sell you something. Okay, so nobody knows where price is going. There is no magical indicator. All they want to do essentially is sell you something. Okay, so you just have to be really careful, because we are in a space where there are a lot of scammers. There absolutely are a lot of scammers in the space. So you just have to be really selective. I hope that you're here sort of, and you don't need anyone else anymore, but nevertheless, just be careful. You know, there's always scammers out there. They don't have your intentions at heart, and all they want is your money. There is no 100% strike rate indicator. There is nobody that knows where their price is going. Okay, so if you see those sort of things, just know straight away that it's lies. Okay, so I want to end with this before I start. You know, we can have edges in trading. Okay, and the moves are not random, and I believe I've explained this through my own trades, you know, actually doing live trades with you when I'm entering the trades, you know, when I've given you examples. You know, some of you have been here nearly 2 years with me. You know, it's through this sort of like being with me this long, I'm sure you can see that the markets aren't random. I don't make the amount of money that I make through randomness. So I don't think that, you know, I'm under the you know, I would say the markets are totally not random. You know, as I put in here brackets, as I've proven through my trading methods and real examples. But even though I consistently make money, I do acknowledge that there is no 100% certainty where the price is going. Thus, risk management must always be at the forefront of your mind in trading. Okay, so for example, today, what's this? This is about $300 now on this account. Okay, the consistency that I've got here. Okay, you can clearly see over the week, what, 2.5 grand made on this account. But at the end of the day, that is, I've never said ever, well, I am 100% certain this is what price is doing. No, what I do is I trade the probabilities. I totally have an edge in trading, and I think that's undeniable. I totally have an edge. The markets are not random, but I always acknowledge my setup can go wrong. Okay, so I just wanted to start with that. I totally hope that has been beneficial, this little risk management section. I personally feel it's extremely important, risk management. Yeah, I just want to know. I just really want to say I never ever know 100% where price is going, and naturally, I guess that obviously, people in the group, I know that I'm on a really good winning streak, and to be honest, my ego, I personally think I'm the best trader in crypto. Like, no lie, I think I'm the best. But nevertheless, I take losses, okay, and I never know where price is going. I just trade probabilities. I know, that's just my opinion. Yeah, I wanted to start with that risk management section, especially the story, because I hope that's been beneficial of why we place so much importance on it. We never know where price is going. There's no 100% certainty. We have to have risk management at the front of our mind. But at the end of the day, the markets are not random, and we can consistently, in my opinion, predict where price is going. So yeah, I hope that this has just given you more reason to really focus on the charts, because charts are absolutely amazing. They absolutely are, aren't they? So yeah, there is so now we'll get on to the fibs, by the way, but there is not always a setup in a chart. So it was just some general reminders, by the way. So there is not always a setup in a chart. Okay, sometimes there is nothing clear. Okay, so this is sometimes I'll go on to a chart, okay, and nothing stands out to me. Okay, so sometimes there is nothing in a chart, in which case you have to have self-control and move on to another chart, or just not take a position that day. It is okay not to trade every day. And today is a prime example. I totally, at the start of the day, was just like, well, nothing, I'm specifically Bitcoin here I'm referring to. So at Bitcoin at the start of the day, I said, well, nothing really takes my fancy. I don't see any amazing setup that stands out in front of me here. I'm just going to take a step back, not take a single trade until what I want, okay, the trade I want comes to me. Okay, so I was very much clear to myself that I would not take a trade until my setup comes to me. I'm not just going to trade, okay? And as you know, this was a screenshot from the group which posted on Twitter. But today in the group I posted, I would like to see the rise to 8160. My short was taken at 8163. It's paid off, essentially. It has paid off. That's undeniable. So having that patience, going back to what I'm saying here, having the patience to not just take a random setup. You only want to take the best trades, and this relates back to this. Okay, so this relates back to moves not random. Like, I'm not just going to take a trade because I'm feeling bored, or I have some sort of addiction of having that adrenaline rush. No, absolutely not. At the end of the day, trading still is my main source of income. I make more money trading than I do anything else, period. So when you make that sort of money through trading, you don't make money through trading taking bad trades. Again, I hope that makes sense. I make money through trading because I take good trades. And that means I take trades where the highest probabilities are in my favor. So if I go onto a chart and I say, man, there's nothing here, I am more than comfortable going one day without trading. If a setup doesn't come to me, I can go 1 week, 2 weeks, 3 weeks with zero. Although that's not the case. It's very unlikely you go that long with not seeing a setup. But nevertheless, if that was to happen, I would go that long with not taking a trade. I'm not going to trade something for the sake of trading. Okay. So just know it's totally okay. You don't have to trade something every day. There's not always a setup, and there's not always a there's not always a setup there, and that's absolutely fine. Okay, so it's important to remember that we never know 100% where price is going to. We can have 100 confluences together, all lined up as support, but price can still through that support, and that's going back to risk management. But primarily, I just wanted to note this, that some charts that you are going to go to, and you're gonna find no reasons, or maybe you'll find a random example. You might find one sort of, one sort of thing on its own, and that you might just say to yourself, well, I've got one thing of confluence here, but that's not enough for a good high probability trade. Remember, the high probability trades are where you're seeing 3+ confluences lining up together, okay, and that's what we call high probabilities, a good trade. If you don't have those good trades, I would question saying, why are you taking it? Don't take a trade just to trade, just like you're not just taking every single. I think this is the most that people seem to do. For example, let's just take this as an example. If you're taking your fibs from low up to the high, and let's say you were looking to just buy every 618. Well, here's an example where if you just randomly buy every 618, well, there's a losing trade, okay? Because the way I would look is, if you bought there, your stop is below the low, and well, there you get stopped out, and then the rise comes. So, it just goes back to, just because I like trading 618s, I'm 100% definitely not trading every 618. That would just be absolutely ludicrous. So it just goes back to, that is not a setup. That does not equal a setup. Just because price goes to there doesn't mean it's going to do that. And there's an example actually before the rise. So there's an example of the liquidity run, taking out the lows, swing failuring the low, and then running just a bit random there. But nevertheless, I just wanted to say that does not constitute a setup. Every 618 is going to lose you money if you take every 618. You have to see those confluences. And if you don't see those confluences, it's okay not to trade. Okay. So that leads me on to actually what I want to cover tonight. So yeah, that may have been where I got that example from, by the way, Doltex. I love that book. So yeah, possibly that was where I got that example from. I think it was. I can just remember it many years ago, like actually having the example, and it stuck with me. It really stuck with me. So I'm happy to share it with you, to be honest. But yeah, that was not a story that I made myself, by the way. But it's a good, powerful story nevertheless, isn't it? So yeah, let's run through today then Fibonacci. So obviously we've done, look at the time, man. I think I've gone too long over risk management, but nevertheless, yeah, obviously from the first 3 streams we've gone over Fibonacci retracement. Okay, we've done Fibonacci extensions, and we've done negative Fibonacci. So 3 Fibonacci topics that I've covered so far. Thus today I want to integrate only using those 3. So obviously on a standard day of trading, I'm not going to exclusively use these 3 and nothing else. But for the purposes of today's session, I do want to just use these 3, how we can look for confluences. Okay. So let's run through some of the let's run through everything here, and show you how I'm using the tool. Okay, well, as you kind of saw there, the first fib that I had taken, and we're looking for confluences of this high now. Okay, so from the high of the wick, okay, so that was the last high before a major drop. Okay, so from the very high up here down to the low, okay, down to the low, put this on the standard. Okay, so from the high down to the low, what we can see here is one confluence, which did hold the top, was the 382 Fibonacci level. So we can see here that's rejected it. So that's confluence number 1. In terms of secondary fibs, we can now add in a negative Fibonacci, and from the negative fibs we're going to take from the low up to the high of this last move. So from the low to the high of the last rise. Okay, put that one to negative. Okay, well, we can say there was no confluences on this rise, was there? Because the 0.618 is sat at 256. The 236 is at 8191. So with the 382 and the negs, there's no confluence. So I'm going to be just remove the negative one for now, because there was no confluence at those levels. Okay, so what's the next? Okay, so we've done the negative, we've done the standard fib from high to low, 0 confluence with the negative. What's the next one you'll add on? From the last high down to the low, and put that on extension. Okay, an extension. Look at that. That's the confluence right there, high to low. Okay, let's line this up exactly with the magnet tool. High to low. Well, that's what I would call confluence here with the 382 on the 1618. Okay, the 1618 is the golden ratio. So 1618 on the 382. And I said I wasn't going to use anything else, but where's all the stops, essentially here? All the stops are sat above this high. Okay, at the end of the day, they are above that high. So, there's the confluence here. And you might say, Daniel, why did you enter your short 160? Well, I was going a little bit more conservative and looking at the at the stops above the more recent highs. But there we go, profit's profit, I guess. But nevertheless, there's your confluence of the overall high on the 1618 on the 382. So you had nothing with the negative fibs, but you did have confluence with the high to low. Okay, so from the fib retracement high to low with the golden ratio 1618, and that's from the high to low 1618 on the 382 with the highs of the overall of the highs here, the confluence. So three factors together. One would say that's a high probability trade, and never, you know, you can see that high probability trade if you did short the top would have netted you about nearly 2% already. So yeah, that's that's essentially the three tools that what we're looking for. Going into and essentially locking it all down together. So yeah, let's go through some more alts and give examples of more running through examples, and a real big apologies because there were questions on this morning. People have asked me questions in the day, and I said, yeah, I'll cover that in the stream tonight. And I'm not going to lie, I have actually forgotten some of the questions people asked. I totally should have wrote it down. So if you asked me a question over in Discord today, and I said to you, oh yeah, I'll cover that in the stream tonight, you might want to write your question again in the chat, because I'm not going to lie, I have forgotten some of the questions, because I forgot to write them down, and that's totally my fault. But yeah, if you want to write your question again, please write your question again. So yeah, this was a question that I had actually on Cardano this morning. So somebody did ask me Cardano this morning, and they gave me the, you have to remember that at Cardano this morning, when the question was asked, was sat around here. So about 511 sats Cardano was sat at the time of the question that was posted. And the question was, Daniel, is 511 good entry price? And I did say no. I did say no, I don't think it's a good entry. I think we're going to drop down to at least the weekly. Funny enough, we have now hit that weekly, and saw a these are scalps. These are scalps, but there's a 1.5% rise from the weekly touch. But the question was essentially, well, he had his channel different than mine, and that's because he was looking at the BitMEX chart. Whoever asked the question knows who they are right now. But the BitMEX chart is, firstly, the BitMEX chart's different than the Coinbase. Well, obviously the Coinbase, the BitMEX, and the Binance charts are all going to be different. I primarily, even if I'm trading on BitMEX, refer to the Coinbase chart. I find this chart much more reliable, if I'm honest with you. Firstly, if you just compare the two, okay, so if we do come across to BitMEX, and you do look here at, this is obviously the Binance chart. Look at all the history that we have here. A lot of history on this chart to, do technical analysis of. You need old data to do TA. And then if you look at the BitMEX chart, well, what would you prefer to chart on? Would you prefer to chart on this, or would you prefer to chart on this? I think the answer is very clear. Why would I? That's just my. They're both, one sat at 503, one sat at 502. So there's one sat of difference. Yes, there is one sat of difference, but then nevertheless, as you can see, I don't. If I trade Cardano, I do like to trade it on BitMEX, but I will do my TA off of the Binance chart because it has the history. Find it more reliable, and that's the reason. So I hope that has helped you. Firstly, in that regards of, even if I'm trading this on BitMEX, firstly, there's one sat difference. Secondly, I just find the TA works better on Binance. But and there's more history, and that's what you need to trade. You need that history to actually do technical analysis. But a few questions that I have received. Okay, and this is what the first one here. Okay, it's not the best channel. Okay, and I think I might save this till ZRX. Yeah, let ZRX. Let's just use this example, because this is a question that I was received, and this was a question from I don't know whether I should give names. I don't know whether people feel embarrassed. I'm not going to give names, but this was, people are going to have seen this question because it was documented in the Champions group. But the question was, once you break out of a channel, what are the targets, Daniel? So what are you looking for once something breaks out of a channel? Okay, so the question is very simply, when you are in an up or downward sloping channel, once you're inside of this channel going very, very nicely, when you break out of the channel, how do you trade that? Obviously, you're looking for shorts, because breaking out of the side of the channel is bearish. So once you've broken out of that channel, where are you trading this to? Okay, my answer is very, very simply, from a very, very simple perspective here, you have to remember that every trade is different. It's not as simple as this always, but very simply, fib from low to high of wherever that high is. Okay, fibs obviously starting here from where the move started, so bottom of the channel, fib from low to high, look for the 618. That would be where I'd expect the first reaction off of the 618. If that doesn't hold, I'd look down to where the start of the move is, and that's obviously where the start of your channel is. If that support doesn't hold, well, you have to use some other method and expect lower prices. But if something breaks out of a channel, I am looking firstly for the, the champions channel, 618 to 66. If that doesn't hold, then I would be looking down to the where the move originated from, and expect that to hold. And then if it obviously doesn't hold, then you just got to look for lower prices and use some other tool to help you get targets for that. But that's how I look to trade a channel. If a channel is broken, like ZRX is an example here, where you can see here, okay, and I love ZRX, I really do, but ZRX, firstly, just look how amazing the channel is. Literally amazing. And this is why I love it. This is why I love this coin. Absolutely, I do. Low to high, to low, too high to the exact sat high. That is amazing. Exact sat high. Okay, coming down to the midpoint, we know the fib confluence. We got a double top. Middle, low, 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 rejected off our daily level. So this was a daily rejection. Again, more or less to the sat. Dropping down, bottom of the channel. Just absolutely amazing. Bottom of the channel, another nearly 4% rise, but ultimately a lower high. Lower high, lower high, lower high. Well, I guess low, lower high, lower low, lower high. Bearish market structure. Needed to take the high. Didn't take the high, but look at the bounce off the channel. Losing the channel, this is where it's amazing, losing the channel, back testing with a high upper wick and dropping back down. Okay, and here you're back into bearish market structure. Firstly, how can you not love parallel channels? This is just absolute perfection, and I did trade this, I did make money on this, but that's perfection right there. Literally, I mean, I want to just go through that again because of how perfect it really is. Low, high, mid, double top, mid, bounce, rejection off daily, bounce off the bottom, lower high, lost channel, back tested channel, and you're talking about another 8% drop. Where does it drop down to? It did drop down to weekly. Okay, so you did drop down to the weekly here. Weekly holding price, essentially. You did hold price over the weekly. You got a 11% rise. A little bit of I'm not going to use foul language, but a little bit of a not a great trade if you entered along here. What we can see here in hindsight, very much hindsight, but you took a last high, you did take the high, close back below it, and you can kind of see that you take the high, you don't really get any nice closes over it. That's what you want to see. But if you're trading from the channel, it's very much a fake out, okay, because what you do here is you do close in and around the channel, okay, in and around the channel before eventually again closing outside, back testing it here again and dropping down. But nevertheless, for ZRX, for example, if we're using a very standard method from low, we're through the 618 very clearly, from low to high. Okay, you can see here how it broke outside. You did hit the 618 here, and you got in bounces. So there's scalp trades 100%. There's a 2.5% rise. So you did get a 2.5% rise, but eventually, look, this is what I'm saying. Follow through. So although you bounce off of the 618 and there's a scalp there, that's 2.5% you got to lock in, because what have you done there? Well, there's old support, isn't it? So old support, support, 618 bounce, but that old support resistance drop down again. Where do you drop? To weekly? So that's SR flips. They're so easy to trade, if I'm honest. But there's the 618 holds for a bounce, but ultimately it's broken through. Could see it back tested, by the way, now and hold, but that's another one. But nevertheless, you do see the 618 get a small bounce, ultimately that down to weekly, another bounce. But from the rule of thumb, losing the 618, I'd be looking for the low of the origin of the channel, okay, which is obviously down and around here. But seeing that might change that perspective. You have to remember that a rule of thumb that I'm looking for the 618, and a rule of thumb that if the 618 is lost, I'm looking down for the bottom of the channel, totally would exclude there's a massive weekly level right there. So yes, more of a rule of thumb, but you have to have a general rule of thumb way how you're looking for targets. And obviously I'm saying champions channel down to origin of the move, but please don't forget these SR levels. They are clearly critical. The 382 was also an old daily level. Oh, on Bitcoin, yeah, very much probably was. Yeah, but yeah, essentially that I just wanted to go over the channels of how I trade them. So let's move on. So what were we on next? Atom. Ooh, Atom has been another good one. I think I covered this in the champion. Yeah, I covered this on the champions live stream on Sunday. And how well has this worked out? Obviously, I was debating wave 2 here or here, but at the end of the day, it's not making any difference to us anymore. But yeah, obviously I was covering this Elliott wave count on the Champions live stream. And what did I do on the Champions live stream? I said, there's wave A. Now we're in an A, B, C, D, E. And I'm expecting this to break down. And I think I said this right at the very top. The 17th was Sunday. So, yeah, Sunday, our live stream was going on at this time. So we were literally at the top of this triangle. And you can see here from the top of the triangle where I was 100% expecting that to break down. Price is now down 10%. So there's Elliott waves, absolutely lovely working for you right now. But going back to Fibonacci, you know, what we can see here is move down A, B, C, D, E for the B. So A, B, looking for the C to complete to actually get an entry here. So where's our confluences? Okay, so let's go over confluences. Firstly, what we can look here is, you know, our first very standard is going to be from the last low up to the high. Okay, so our 618 there is coming in at 3831, but we're not only trading off of 618s. So the 0.5 is coming in at 404. Weekly is obviously 3938. Okay, so what's the next level of confluence that we can be looking for? Firstly, I would go off of this, okay, and I'd take a negative Fibonacci right here. Okay, so look at that. Negative 618 on the exact level, okay, on the exact level of the weekly. I would say that's not random. Okay, so you're seeing the weekly lining up with the negative 618. Okay, so what's the next pool that we can do here? I just go from last low up to the high, okay, and add in a extension. Sorry, it does get a bit confusing when you add in everything here. So extension, this is why let's just remove the negative one a second so we can see. Okay, so the 2 to 2, okay, so you see that? Look at that. So the confluences here are the weekly, sat on the two extensions, sat on the negative 618. So using Fibonacci alone, well, we can clearly see, well, there's 3 levels lining up together. Okay, so there's 3 levels lining up absolutely perfectly. One has to say it's a very good target. One has to say it's a very good target. You know, weekly on the 2 extension on the negative 618. One would be looking here for a move down to here to complete the ABC, if we're honest with you right now. There's the A, there's the B, looking down for the C. I mean, I said I wouldn't use this, but out of interest, I'm really, really quickly going to see where the 1-to-1 is of this. Oh, look at that. Okay, so if you go for the 1-to-1, it's also sat on this level. I mean, the confluence is unreal, if we're honest here. But yeah, that's where your confluence is. So you have to have an alert at least set around here to be aware of what's going on there, because I have to say that that's strong confluence. You know, 3 levels of fibs. You know, you got the front 0.5, the 2 extension, the negative 618, the weekly altogether. If you want to look at Elliott waves, then you could say you're expecting 5 more down here. And you could try and look at this. I don't want to spend too long on Elliott waves, but we could look at this in some sort of 1, A, B, C, 2, putting in a third for a fourth, for the 5th down. So, you know, from an Elliott wave perspective, I would argue that you might come down a bit lower. Maybe we do come down to the bottom of the channel here, but you know, you have to have an alert on this area because there's clearly confluence. I mean, if you're looking at the channel, then you could expect a little bit lower and look for this. You know, what you could see if it sells off quickly, well, look at that could be perfect. The channel under 618, for example. But at the very least, you need to be alerted of what's going on here. Do you actually hold this level, start making higher highs and higher lows, or do you lose that level, back test it, and then you look down towards this? I mean, that's what you're looking for essentially. But yeah, one has to say that level on Atom is very strong. It is very strong, if I'm honest with you. Yeah, I love it. I absolutely do love that one. The one theta. Okay, so I'll go through ones that I know were requested. So I know engine theta was requested there. Engine coin was requested, so I'll do engine coin. Was it? I can't remember what was requested now. well, someone's just requested that. So engine coin here. What we can see is firstly, well, what are we looking for on the pullback here? Firstly, we had this really nice channel. Okay, so we did have this really nice channel. I mean, once again, look at that. To the wick off of the daily, by the way, absolute wick of the daily, which is also the top of the channel. Getting a move up to weekly, so you've bounced off a weekly there, and you're getting a pullback. So what could we look for here in terms of confluence? Okay, so let's take a look here. The first thing we need to do is zoom out a second. So the first thing I'd do is zoom out here to the daily and see what we had in terms of resistance here. So I would say that we can take, that's going to not get anything from the last high up here to the low. Let's just see where we got rejected from, about the 0.5, and as you know, that's the weekly. So you can see why you're getting rejections at this point. Okay, what have you done? You've taken out a really big important high, you've wicked the high, and you're dropping back down. Anyone buying this breakout is already underwater. People that had stops above the high are also stopped out. So we can just firstly acknowledge why we're getting a rejection there. Okay, so now once we've seen the rejection, let's say we want to buy the pullback. Okay, so what can we look for now? Okay, so what can we look for? You know, primarily I only want to use fibs here for the purpose of education. So what I would say is this is the last low where it got impulsive up to the high. You know, I just, the daily, you don't really have anything there. On the shorter term, you don't really have, and this one's hard to see confluence. If I'm honest, this one is not going to have much. What can we look at here as well? So I mean, what I'd be more comfortable in doing is, after seeing a rejection like this, okay, so after seeing a rejection like that, swing failure pattern, big sell off to follow, what you want to wait for the rise, because you would not expect it to go straight back up. If I'm honest, you would expect this to get a rise. You know, maybe it bounces here, gets a rise. Okay, and then you look to buy the next pullback after that, because that's when you start getting your confluences. That is where you can start getting the extension. The you know, at the moment you can't, you know, I wouldn't have a negative or an extension on the pullback, on the first pullback. You need to wait for the first rise. Okay, and you know, very simply, well, where you're going to be looking for that, I mean, you know, first off, I'd be, you know, at least looking at the 382. So let's say that you do. Let's just keep that on for, you know, what we'd be looking for this one. Let's say that it does get bounced here, pulls back into the 382. From the 382, you start pulling back, and as soon as you lose that low, well, then once you've lost that, that's when you can then add your extension. You can add your negative. Okay, so let's use this as an example. We could then draw this, okay, as an extension. Okay, then you see the 1618 on the daily, and you could also add in here, okay, the negative. Okay, and that's where we could start to see negative 236 on the 1618 on the daily. Obviously, this is one I just wouldn't enter engine coin myself at the moment, because again, I mean, the only entry that you do have right now is primarily on the backtest of this channel. So you do have, you know, what I would do if I was feeling aggressive was ladder down to the daily sort of thing. Try and get that bounce for the lower high. I wouldn't expect it to go up like that, although it definitely could. It could do that, but I wouldn't expect it to happen. I would expect more something like this. Okay, and then you look for all your confluences between the fibs there before you look for that. Okay, or bang bang, or something like this: bang 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 bang. Okay, and then you got a very nice entry to try and trade it back up. But nevertheless, it's a little bit too early for my opinion on engine coin, unless you're feeling aggressive. I'm not saying you're wrong by taking aggressive entries, and in that case I would say ladder. So you could literally be entering it right now, but ladder. Once you've done those laddered entries, I would only myself be looking for a lower high after swing failure pattern of the high myself. I'd be looking for that to that. You know, you can definitely trade that, and then if it keeps going, then you know you're off to a winner. But I wouldn't look for that straight away. But that was engine coin that I know was requested. By the way, I do need to give this one, just please read this while I take a drink a second. Cool. Just needed to make sure people read that, because this is not financial advice. So I was going to go through a very what was that example that I was going to load up? Trying to remind myself. I had a really nice example of one. I can't remember now. So somebody requested theta, so let's do theta. well, let's just delete this one and start it from scratch. Okay, so as you can see there, I've got some levels of why I think this is getting rejected. But let's do theta from scratch because this is requested a lot. So, you know, for me, these are like, yeah. Anyway, you know, I'd done theta in a chart of the week a few weeks back, so I was aware of the potential of this, and clearly it has had that potential follow through. But you know, you just so theta. So we have our first monthly level here that I would have marked out. Okay, so monthly, and that's clearly from our monthly low red candle here, the lowest monthly close, followed by a green tweezer bottom. That's clearly our monthly level that we're aware of. The second monthly I would have on is this monthly because that was the low of the monthlies up to the massive rise. Okay, so I would have that old monthly marked on the chart. You know, I could add on this monthly, but what's the point in me clogging my chart while we're not even past this one? So I like to keep it in the range. So I'd say this is the monthly range that we're in at the moment. Okay, so once I've done those monthlies, let's move down to the weekly. Okay, for me, there's not too much. This weekly is too close to this monthly. I wouldn't bother marking it out. Let's just see what I have here on the daily. I would say this is coming in at 1105. This weekly is yeah. Okay, so if we come down to the daily, this daily for me is going to come in at about the middle of the range. So that's a daily. Okay, and as you'll know, when we go the ranges from top of the range monthly to bottom of the range monthly, that's the range that we're in at the moment. We can just put this onto 0.25s, okay, and I would say I'm good deleting that because look at this, actually it's really nice. So that's the monthly range that we are in. Okay, so that's the monthly range that we're in. Okay, so from this monthly range we can see from the bottom of the range 0.5 rejection, 0.75 rejection. You know, that's for me nice. If you're confused of what I'm doing here, you need to go back and watch the parallel channels video because I've covered this, by the way. But you know, this is what I would do on my chart. So you got the top monthly, you got the bottom monthly, and now we're clearly range bound between these two monthlies. This is what's holding the market right now. Okay, to get I guess for bullish continuation, you need to see the close of the monthly, and if you're going for lower prices, you close back down below it. But that's the range that you trade right now, literally. So today you've got rejected off 7.5 of the range. Okay, prior you can clearly see the resistance that was on 0.5. You've now lost 0.5. That's not good. Okay, so that's firstly the range that I would have on here, and I wouldn't delete that because I think this is lovely. You have to remember that this has been range bound a very, very long time now. We're talking about 161 days. So 161 days within inside of this range is nothing to laugh about. So now what can we look at here? So fibs from high. So a Fibonacci. Again, we need to change this to this. So Fibonacci from high down to the low. Okay, so fibs from high to low. What did we run into here? We did run into the 7.5, which was also the the Champions channel here. So you can clearly see the resistance. Okay, if you zoom in and you can actually see, you rose up, hit the 618, hit the 618, drop. I mean, this is so perfect. Resistance. Look at that resistance on. Oh my god, it's absolutely perfect. That's the I just am amazed at how amazing technical analysis is. That's the 0.5 of the range, okay? That's the 0.5 of the range that I've got here. Well, look at that. Resistance off the 0.5, resistance off the 0.5, holds a higher low, breaks through to the 618. That's from 618, 618, drops down from the 618, hits the 0.5, old resistance of the 0.5, flips into the support. You move up from the 0.5 to the 7.5, that's 6%, and look at that. It's just absolutely perfection. So yeah, that's technical analysis for you. But yeah, there you can see amazing technical analysis. And then you get the rejection from the 7.5. You've seen a heavy retracement at this moment in time. So you have seen a rejection, a pretty heavy rejection. Okay, so from this, what can we be looking for? Okay, well, firstly, if I'm looking for a pullback, I'd be just delete. I don't want to delete everything. Let's just go from the overall low to the overall high here. Okay, put this back to standard. Okay, and we can see, well, there's that's what we have here. I would firstly highlight the lows that are going to be sat below here. I would love for a pullback onto this low and see something like this, but that might not happen. So we have to see for where's this likely to bounce first. Okay, where this got impulsive up to the high now. Okay, so important to note that we are through the CC here. There's no confluences lining up, and that's from the last impulsive low. So I'll take another fib myself from this low up to the high. Again, nothing really lines up for me very nicely here, if I'm honest with you. There's nothing really lining up. Obviously, the 6.6 on the 6.18 of that low. 6.6 on the 0.5. It's a little bit of on this low. So on this low where it got very impulsive, you do have the 618 on the 0.5. I think you got to be alerted of what goes on here. So I would just like add an alert and then say to myself, okay, is that holding? Okay, so does this hit and hold, start holding bullish market structure? Well, if it does, you can enter, have a stop loss and try and trade that back up, you know. Or alternatively, it does something more like this, okay, and comes down to lower prices. But you know, you got to be alerted of what goes on there. There's no point in wanting to trade this without following what it does. So I definitely have the alert set here of does this hold or does it not hold. Again, you see, like, very similar to ENG, how you haven't got that pullback to start getting your externals and your negative fibs at this point. You need to see the first three pivots. So you need high, low, and that. You need that pivot before you can start adding in the confluences. Currently, you just have the retracements. And, you know, I could go over other tools because I wouldn't exclusively trade off fibs, but I want to use this session for exclusively fibs, if that makes sense. But there you go. So yeah, that's theta. That I would say you want to see the reaction of, you know, around this 1077. Wait for the reaction here. But how does it react? That's what you need to have a high importance of. Does it hold? Then start going into bullish market structure, or do you just break through the level? Got to wait to see this level and specifically the lows of how it reacts. But overall, there's no need to start getting extreme FOMO. You are still range bound. I'm really aware, by the way, that theta is the coin of the month for shilling. So I'm aware of the hype around this coin. But you know, at the end of the day, it's range bound. Break the range, well, you know, that's very bullish, but at the end of the day, it is range bound, so just be a little bit careful on it. There's no need to get too euphoric while it's in a range, you know. You know, absolutely it can break out and go to the upside. And if you watched my chart of the week, I think 2 weeks ago, we were trading it down and around here. So there you go. That's when I was sort of chilling it to the group, 20%. And now you're starting to get people on Twitter mentioning it. So you just want to be careful about it now. You know, I get in before the crowd starts getting in. That's all I'm going to say. So just be a little bit careful of there. It's, you know, it's still range bound at the end of the day, but there's still money to be had 100% on it. And let me go through this. On Atom, if you move the channel slightly up to hit, let's go. So Atom, if you move when, sorry, let me take the comments in order so it's no favoritism. When you log, when do you do your, what do you log when you do your charting? Do you mean like when well, I guess what I'm going to say specifically is I'm going to load up. I'm going to load up this again. So basically this is essentially what I'm, although I don't actually log using the computer, I prefer to do it all by hand, but I'm old school. So basically, this is what I'm logging. Okay, so when you're logging, okay, you do want to be making a note of what your entry was, what your stop loss was, what your target was. Okay, a picture so you can go back and refer to what you know why you were taking the trade. Very important. What you want to be logging, okay, as well, is the reasoning. Obviously you could write much more than this, but you want to be noting the reasoning why you're logging. Okay, so you know those are just like key things that I myself would log. So you just want to be really noting to yourself, you know why, you know what you were trading, why you were trading it, the reasons why you were trading it. You might also want to know, you know, specifically for statistical reasons, you might want to say, like, maybe have a category of that setup. Okay, so then you can, once you've got a category of the setup, then that's how you can start getting statistics. So for example, you know, X reason is a specific reason why you enter consistently lots of different coins, and that's how you build stats, I guess. But you know, make a category of the trade, write the reasons, describe, you know, enter the trade, refer back to it in 1 week. How has it played out? How could have you improved? Reasons of how you could improve. Make a log of that. Move on, sort of thing. You know, for me, journaling or just like logging my trades is really therapeutic. I actually enjoy it. But yeah, I like have a study a study dedicated where I will just go there and, you know, go through my trades and log them all. In the day as I'm making each trade, I'm not like logging each trade. I do it all at the end of the day. I just take my print screen, save them into a folder, and I will like go back to them at the end of the day. For me, it's just like relaxing. I enjoy it, but I do think it's also needed if you actually want to do this seriously, to log your trades. But yeah, that's essentially what I log. And other things that you could log are statistics of what it was like at the time. So, you know, one statistic that you might want to start recording is, what was the longs to shorts like? What was the open interest like? If this is Bitcoin, you know, what was the open interest like? What was your idea of market sentiment at that time? You know, how were altcoins doing, specifically Litecoin? You know, that's a statistic I've started recording over the last year of what was Litecoin like while I was trading Bitcoin, because it does give a heads up. And you know, once you start recognizing these things, that's when you start recording it. That's when you can start making statistics, and that's what gives you the confidence. You know, if I've logged, you know, let's say 1,000 trades, and over 1,000 trade sample, I can see, you know, X, you know, let's say I have X reason of entering a trade, and I've done this 1,000 times, and I can see, you know, 65% of the time I keep winning this trade. Well, you know, with the statistics to back me up, that's what gives me the confidence to enter the trade, because I know 65% of the time, if I take this trade, I'm going to win. So, you know, logging is beneficial because you get statistics. Statistics are beneficial because they give you confidence, and that's what, you know, that is part of the game. You know, you do have to have confidence if you want to be a good trader, in my opinion. You can't go into trading with low confidence, low self-esteem, and just think you're going to lose everything. You know, I guess I have high confidence in myself, and it's not undue. I have high confidence in myself because I am a winner in trading. Like, I am a winner. I am a champion, I would say, personally. But, you know, I get that confidence because I have stats to back up what I do, you know, and that all comes through logging. So logging is really important. And no worries at all. So on Atom, if you move the channel slightly up to hit 3280, 3280, on the 30th, the bottom of the channel lines up with 3390 as well. That channel midline also low. I mean, I would just question of why you moved the channel up to here. I myself wouldn't move my channel up to there. I think if you move your channel up to here, this is like really force fitting the confluence of this. I think this is what you mean. Correct me if it's not. If you move your channel up to there, so you have the confluence of the weekly on it, I think that's really force fitting the channel. Like, my channel would be there, period. I wouldn't move it there myself. I would have it on that wick, and I feel, my personal opinion, just straight off the bat, is moving it up to here to have this confluence is really force fitting that. I would keep it there, and then obviously that needs to be right on the high of these wicks here. But yeah, I don't see why why you would move your channel bottom to there, if I'm totally honest. I wouldn't do it myself. I wouldn't go through this wick because I feel that this is an important wick. And obviously that, yeah, I wouldn't move it up myself, but I guess you could. You could if you're going from candle closes. Okay, you just want to be consistent. So if you're going from candle closes at the bottom here to that candle close, from the candle close, well, then it is not force fitted and it is fine. So you could do it like that and look to trade it like that. And as you'll know, you could also change this into a line chart, and then you will see, actually, yeah, that would line up on the line chart. So you could have this, to be fair to you, on this close here, because you don't have this on the line chart. So it's fair enough that you could see this as then as confluence like that, and that would make sense to me. Cool. Does anyone else have any other questions? It's just like I am a little bit sorry, but I am gonna like wrap the stream up a little bit early. It's just that tomorrow, just so you're aware, it's not like a random reason, something that I do. You know, most of the streams I do go on for like 2 hours, but tomorrow I am flying to Poland, so I don't really have the time to stay on the stream for 2 hours tonight. So I'm gonna wrap it up slightly early, and I do apologize for this. Don't worry, I will, you know, obviously when I come back next week, make it up to you. But yeah, I am traveling, and obviously, but just so you're aware, you have to move this up as well. But and move that down if you're trading off the line charts. But yeah, I will make this up to you, but I am going to wrap up the stream fairly shortly, and that's, you know, firstly, I'm flying to Poland tomorrow. I do not want to stay on my computer all night. I have to actually pack and get things ready, if I'm honest. I'm sure you all appreciate that. I've been on the stream for 1 hour 20 minutes anyway. I've covered what I primarily, well, I didn't really, I wanted to go through more examples. If I'm honest with you, I did want to go through more examples using fibs. I spent too long on risk management, but I think it was worthwhile. I hope you agree with me. And debating. Next week, do I go straight into examples? It's really hard. Next week, what I was planning to do next week was go over the Fibonacci extension tool, but I'm wondering whether I use next week for examples. I'll see how it goes. At the very latest, we get onto it in 2 weeks. We'll see. I just think it's really beneficial to go through these examples so you can actually see the setups. I'll see how next week goes. But yeah. If anyone has any other questions, please say. Oh, hi Dan. Do the retracement negative and extension confluences apply to higher time frames as well? Yes, Ray. 100% they do. So really good question, Ray. And the answer is yes. They do apply to higher term time frames. Okay, 100%. They you know, these tools can be used from the I don't trade 1 minute really, but from the 3 minute, which is my favorite for scalping, 3 minute time frame plus. Okay, so from the 3 minute chart all the way up to the 3 month chart, which is your 3 month chart here. You know, it works from 3 minutes to 3 months. Basically, you can use it on everything. Fibonacci is not time frame exclusive. It's more for it can be applied to any time frame. 100% any time frame. There was another question that I received and that I've just remembered, and the question was which Fibonacci level do I feel is the strongest, or what Fibonacci level is my favorite? That was one, wasn't the exact wording, but it was something along those lines, and my answer is none. I don't favoritize one Fibonacci level over a number and over anything else. You may think that my favorite is the 618, but that's actually not correct. So I only like the 618 because just generally it's a really nice level because you do see bounces off it. But I wouldn't say it's my favorite because, you know, right here, if I'm waiting for the 618, I've just missed a 2% short from the 382. So I wouldn't say like this is my favorite level. I'd say you have to treat each Fibonacci level as its own sort of trade. There's not one better than another. There's not one level of Fibonacci better than another level of Fibonacci. It's just what level has the most confluence. As you all know, that had 3 levels of confluence on it. So clearly that's my favorite Fibonacci in this trade. But give me another trade where there's other confluences at other levels, and that will be my favorite Fibonacci. So I don't have a favorite Fibonacci number for entering trades. It's just whatever Fib level has the most confluence is the one I'll trade from. Yeah. For Atom, I find it quite difficult to see where the stop loss is. Where do you find it? I refer you to the Champions live stream where I gave this one and really explained where to place your stop loss, and I think you're a champion as well, so you have no excuses, Paul. But nevertheless, what I explained was what you want to see is you want to wait here and see the bounce, okay, and once it starts getting bullish market structure, use the low of the move down as your stop loss, because I agree the stop loss is fairly wide. If you're catching a knife, your stop loss is really wide. So that's why I kind of explained in the live stream, well, you got to wait for this move, kind of like Walton chain. Wait for that to go into bullish market structure. Use the low as your stop loss. Trade it back up. But I agree. If you're catching a falling knife, the stop loss is wide, because I would say off the very just off the top of my head here, I would be looking at really this low as a stop loss. So what's that coming in at? 3766. I mean, it's pretty wide, or even 6560, and that's a really wide stop loss. So it's a wide stop loss, hence why I would wait for the price action myself, not knife catch it, just like I wouldn't knife catch any alt right now. But yeah, I'd say you got to wait for the bounce and then get in on bullish market structure and use the local stop loss. But yeah, because the stop loss is so wide if you knife catch, so it just doesn't make sense to knife catch it. I guess you could use this low. You could, if you really want to, although I wouldn't recommend it, you could use 3940. You know, I would not do this myself, but you could trade this back up to those highs. Okay, about 4 to 1. Maybe move it down to that low. I mean, if you're going for that, you got a 5 to 1. But yeah, nevertheless, I wouldn't knife catch it, so I wouldn't have a stop loss set. I would literally just day trade. I'd wait for the bounce and get in on the bounce. Yeah, no worry, Paul. I'm only joking. There's nothing personal, by the way. I'm literally just joking. But yeah, I mean that's basically what I said on the live. It's just because I don't like repeating myself, really. But yeah, basically my answer was, instead of just like pre-entering a trade, I understand as well that not everybody has the luxury of free time, and I understand that people have full-time jobs. So if you don't have the luxury of just waiting for the alert and waiting for the bullish market structure, then I guess you're going to have to enter more aggressively, give yourself a wider stop, and I guess that stop loss really sensibly has to be at around 3770. I myself wouldn't do it, so just a real big disclaimer, I wouldn't do it. But if you feel you have to take this trade, and I feel there's not a trade that you have to take, there's never a trade that you have to take. If you're not at your computer because you have a full-time job and you cannot take this trade, or just don't take this trade and wait for a setup where you do have a swing trade opportunity. But if you feel you really have to take this trade, then I would give myself a bit of a wider stop loss to around 3770. But I myself wouldn't do that. And just reminder of this disclaimer, by the way. But please pause and read that. Yeah, I do understand, though, that not everybody has the time to sit at their computer all day, and that's totally normal. So yeah, you just have to give yourself a bit of a wider stop loss. But remember, you are knife catching this long. I mean, to be honest, for all we know, we could get to here and take off. So there's no guarantee that it does even come down to here. Remember that. You could literally take off from where you are right now, because well, I guess on the 1 minute here, what we bounce around a 6-6. We'll look at that. That's horrible charts, but nevertheless, you know, you have to remember you could just go up from here. There's no guarantee we come down this low, but yeah, I hope that explains. Cool, no worries, man. No worries at all. Cool. Yeah, I mean, this is the thing. Like, myself, because I personally do view that as a large stop loss, and there's only literally one way you can counter that large stop loss is literally have the alert, and you have to think that it's possible that it does that and a V-shaped bounce and you miss the trade. But who cares if you miss the trade? I would say, who cares if you miss the trade? But more likely you don't get the V-shape and you do something like this. Okay, and once you start getting that bullish market structure, that's when you enter. That's when you have your stop loss much closer. But you know, if it does the V shape, then you just miss the trade. But you know, that's part of trading, I guess. Cool. So if nobody has any other questions, I think I will wrap it up there. What I wanted to mention is the next champion stream. So obviously I do my champion stream every Sunday where we do live trading, but I am in Poland this Sunday, so I get back on Monday the 25th. I get back on Monday the 25th at about, I want to say about 6 o'clock in the night. I would like to do my live stream for the champions on Monday, but obviously it's very time permitted. I'm gonna say expect the champions live stream to be Monday, and let's start it 1 hour later than normal at 8:30 p.m. Okay, if for any reason there is a delay and I cannot make Monday because something could be delayed, for example my plane could be delayed, if something unforeseen happens and I cannot make 8:30, I'll postpone it to 9 at the latest. If not, I'll just do it on Tuesday. And I'm sure you would appreciate, not in the country on Sunday, so I'm moving it to Monday. I'm going to say 8, let's just write it so people can fully see. So 20:30 GMT on Monday. Obviously standard, we're 19:30. So I'll write a update in the group chat on Monday to 100% confirm that there isn't a delay and it's going ahead as planned. But that's the planned date on Monday. Okay, so champions live stream instead of Sunday. It's not Sunday the 24th. I am not in the country, so I won't be doing it then. I will just pushing it 1 day later. 1 day later, I'll push it to the 25th. Okay, and if something unforeseen happens that I have no control over, or I'll just move it to Tuesday. Okay, and we'll do our live trading there. Cool. So I think that is it. Obviously, on the just how amazing was that, by the way? In the last Champions live stream, literally caught a short on that wick, by the way. So yeah, that ended up pretty nice. Obviously, I took 50% off before it got to the bottom here, but nevertheless, it was still a nice catching the short up there to see that drop $600. So yeah, Champions live stream totally worth it. But yeah, it will be on the 25th, I hope, unless something unforeseen happens. It'll be 25th, at the very latest the 26th, but I do hope to have it on time on the 25th, and you know, I don't want to be late home, if I'm honest with you. So yeah, envision it the 25th, on Sunday for the Champions live stream. And obviously all the contenders here, I'll catch you next Wednesday, 100% normal time, next Wednesday. I'm debating what's best for you, whether I do a live stream where I don't go on about risk management, I just go straight into trading Fibonacci. Obviously it's beneficial for you because you can actually get some setups, I guess. But yeah, I'm debating whether I do next week a whole session dedicated to just charting fibs, or whether I move on to Fibonacci extension. I'm going to think about that, because I do see the real big benefits of actually seeing me doing it. But I also would really want to move on. I do want to move on to Fibonacci extension because it's such an amazing tool. So I'm debating. Let me think about it while I'm away, I guess. So nevertheless, I'll catch you next Wednesday, 100%, where we're going to be continuing with fibs. So I will see you next week, or if you're a champion, well, I'll still see you next week. Champions hopefully Monday, but contenders, everybody else, you know, back on the 27th for the next part of the live streams. Hope today has been helpful. I really do hope today has been helpful for you. Thank you once again for joining me. Hope that you have enjoyed, and I will catch you next week on the stream. Have a brilliant weekend. Obviously, you know, I guess it's to be expected, as I am away on holiday. Essentially, I won't be actively replying in the Discord, you know, straight away. So, you know, if you at me, I'll try and reply to you in the evenings. If I'm on it, I will try and get to your messages. But yeah, I'm just be aware I'm not going to be instantly replying to your messages. Just appreciate that, I hope. And then I'll be back, everything back to normal on Monday. Oh well, Tuesday really, everything back to normal, and I'll be, you know, back killing the market with you all again. But you know, while I'm away, just be aware. I would love to see how you chart with those fibs more. Yeah, I really do think it would be beneficial to do a whole session dedicated to just using those 3 fibs, using way more examples. So I do, yeah, maybe I will do that then. Yeah, cool. Nevertheless, I'll catch you all next week. Thank you once again for joining me. Keep your eyes on this short. Currently, it's going more or less okay. Let's see how it breaks over resistance. But yeah, I hope you've enjoyed. Thank you once again. Have a brilliant night. Have a brilliant week. And I'll catch you next week for more trading and making some more money. Thank you. Good night. And cheers, everybody. Thanks. Bye. Cheers.